Bitcoin's price action is finally cooling down from that nice little rally went on. So we're going to look at some high volume areas of some buying and selling and look at some new local price ranges to see where we could end up. Then we're going to get into an interview from Fundstrat's Tom Lee on CNBC talking to some financial experts, and we'll see what we think about that. Then we're going to get into some dope news segments about Ethereum ETFs, cryptocurrency versus Forex, and cryptocurrency firms taking a fight to the SEC. So if you get any value from this video, hit that like button, hit that subscribe button, because don't nobody do it like we do. What's good? Welcome back to another episode of Where the Money At. We on episode 59, and you know we keeping it rocking and rolling. So I ain't gonna waste none of your time. Let me share my screen and let's get right into it. So let's look at CoinGecko here. We have Bitcoin sitting at $51,100, down 1.8% in the last 7 days. We have Ethereum sitting at $2,945, BNB sitting at $374. One of the best holders of value as far as cryptocurrency is BNB token. We got Solana sitting at $101, and finally XRP sitting at 53 cents. So let's look at it from the large term scale. We have this long positive uptrend that we've been on basically since November 2022. And I just drew some lines here, just some trend lines to show where we are. But it's looking like from the cool down rally. So we had a nice price action going up from 42,000 all the way up to 52,000. So let's zoom in a little bit. I just drew these lines, but it's looking like we peaked above it and we're trying to come back and test it as support. Now, if we do test it as support, the next high area of buying and selling, which we call order blocks, was around, let's say, in between 52,000 and 54,000. You can notice that by the peaks and troughs right here. And that's where the algorithms have a lot of buying and selling going on. The institutions are getting in and getting out right here. But the next bullish level above that is our all-time highs of 66,000 and 70,000. You know what I'm saying? So that's actually crazy to realize we're only 25% off of the all-time highs at this point, this close to the halving, which I don't think we've been this close at this point. So, you know, things are changing. And that's what I say all the time about all the patterns and structures that Bitcoin has formed. This asset class is so young. Everything is pretty much primed to be broken at this point and nothing set in stone. The only thing that's promised is change. So let's keep our eye on that. Really quickly, let's just look at some fib retracements to see where we are. Let's go from the all-time high of 70,000 to the local low of about 15,000. And we're currently sitting in between the 0.618 and the 0.786. And we don't have a lot of volume here. So I believe we'll either be staying around the 49,000 area or going up to the 58,000 area. That's just my belief. None of this is financial advice. You know, this is just for fun, you know what I'm saying? Just something to look at. So let's get rid of all this nonsense. Is there anything else we want to look at on the chart? No. Let's get into the ETF price action. We got Grayscale Bitcoin Trust sitting at 45.62. iShares Trust at 29.17, and Fidelity sitting at 44.75. But the one thing that I want to keep track of and keep my eye on is the assets under management and the market cap. Those are the two biggest things that I believe to be the biggest factors. And with cryptocurrency ETFs being so new, there's bound to be newcomers. This top 10 is going to change. This top 25 is going to change all the time. So just like the top 10 in the underlying asset of just the regular cryptocurrencies change all the time, so will this. And I think we need to keep our eye on it because this gives us an entirely new market to start to track and pay attention to see if we want to invest in. So that's it for price action. So let's get into Fundstrat's Tom Lee's interview on CNBC. Not CNBC, CNBC.
Well, it's very useful if you're an investor right now.
Yes, it's been a great store value. It's been a good risk asset. It's also incredibly secure. You know, there hasn't been a single fraudulent entry on the blockchain since inception. I don't think any bank can say that's true of their P&L and accounting. You know, 6% of banking transactions are suspicious, 0% on the Bitcoin.
What did Gensler say the other day?
So let's set the scene. He believes Bitcoin can go as high as 150,000 this year, and these two guys that he's interviewing with are kind of hostile towards Bitcoin and cryptocurrency. But I'm gonna tell you what I truly believe. I don't believe them. I believe, you know, off camera, they really understand what Bitcoin could possibly do and the power of blockchain technology and how all these companies are implementing it and what it could do. But I believe, for the sake of their company's agenda, they're still kind of anti-Bitcoin, anti-crypto right now, and that's cool. But for the sake of this video, let's say I believe everything they say. Now they're asking him questions. Let's run it back. Let's run it back to understand what he said, because they're trying to ask him, where is Bitcoin right now? How is it doing? So we'll break it down.
Well,
it's very useful if you're an investor right now.
Yes, it's been a great store of value. It's been a good risk asset. It's also incredibly secure. There hasn't been a single fraudulent entry on the blockchain since inception. I don't think any bank can say that's true of their P&L and account.
So he said there hasn't been any fraudulent or any misprints or any errors that happened on the blockchain network since inception, and so far that is true.
P&L and accounting, 6% of banking transactions are suspicious, 0% on the Bitcoin blockchain.
What did Gensler say the other day, that he trusts the Oracle database more than the blockchain
the thing that
distributed ledger? That was bizarre, wasn't it?
Well, I mean, the blockchain is just one big piece of software, but, I would trust the proof of work concept that you now, instead of having 5 people manage an Oracle database, you have a consensus mechanism.
So I like what he said, because he said the blockchain is just software. It's just software. It's just a data structure. You don't care about how Apple's iOS operating system works. You don't care how they move their data. That's the point where we're going to get to with blockchain technology. We're going to start using technology that uses blockchain, and we're not even going to know it. But he says it's not about trusting necessarily just Bitcoin. It's about trusting the data structure and the concept of it. So what he's referring to is, or let's say we're using an Oracle product, or we're using a Apple product. The company Apple has several people managing their database. But if it was the blockchain network, everybody who's using the network, everybody who's using the product has a copy of the database and can sign off and see and pay attention directly to if there's any fraudulent activity going on. Everybody at Apple who uses an Apple product does not have a copy of the database. That's what he's talking about, and that's why I like what he's talking about.
And that's
Right,
what's
exactly.
But Tom, here's the flip side of that, and you've heard it from the Jamie Dimons of the world, maybe even Elizabeth Warrens and others who say, despite what you said about sort of how good the blockchain is to be able to find where things are, it is the medium of choice for ransomware. I mean, just you go through the list of sort of terrible illegal behavior.
He said you can go through a list, but listed one thing. But he's talking about terrorist activity, fraudulent activity, black market activity, ransomware, hackers. He says Bitcoin is the choice of medium. If everybody has a copy of the network and can see which addresses it go to, how could cryptocurrency be a smart idea to use for fraudulent activity when everybody on the network has a copy? If you go on Ethereum or any of these other cryptocurrencies, they all have block explorers, and you can see every transaction that happens. Well, if you were a criminal, what would be the best way to do fraudulent activity without leaving a paper trail? Cash. Bitcoin didn't even exist until 2008. So what were they using before 2008? Cryptocurrency is the worst medium to do crime on. That's like doing a crime with a credit card. The credit card company can just pull up a user interface and map everywhere that you pull money from, that you spent it, you know what I'm saying? The computer that you spent it on. Why would you? They don't even understand what they're saying when they say this type of stuff. But I'm gonna let them rock out, because I believe they're truly disingenuous when they say this. I believe they understand exactly what's going on. Like, he's being very facetious right now, but it is what it is. But the common person will listen to this because it's CNBC and believe the fake perspective that he's trying to come from. And I think we all should watch out for stuff like that. But let's let them rock out.
People in that world seem to love Bitcoin. What does that say about this?
Well, pirates were the first people that liked gold, so we knew gold was a good store of value. But I think equally important, the dollar is used in more illicit activities.
99.
I know, we talked about that, obviously.
90.
All right, we're gonna end it right there. They asked him a question, I ain't even let him answer. But the best part about this is some of the comments. Like I'm Doc 7872 says, Tom is like the teacher who sits back quietly letting his students destroy their own arguments, which He's not even sitting back. He's trying to answer the questions, and they're not even, you know what I'm saying, not even letting them talk. Pirates were the first people that liked gold. Tom Lee. Yeah, that was kind of a bar. That was kind of a bar. Tom looks at that guy like, dude, you're an idiot. Shout out to Fire Chase. But yeah, I mean, the best part about a lot of this cryptocurrency content is the comments. I'm telling you, like I was even on Twitter and I saw this tweet that financial analysis on CNBC really said if Bitcoin was a true store of value, then the price wouldn't change. These are the professionals, quote unquote. You know what I'm saying? They got them looking crazy. And then but that's it on that. I just thought that was really, really funny stuff. And then I saw one more tweet. I saw one more tweet that was interesting. Let's check it out really quickly.
Crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that 1.1 trillion was, what was that a year ago? A lot higher.
Yeah, it's had some.
So Jerome Powell, we all know who he is. You know what I'm saying? Federal Reserve Chairman said Bitcoin has staying power. We all knew that, but he said it reluctantly. You know what I'm saying? He's hesitant because he doesn't want to give it that full go because, you know what I'm saying, people have agendas. So whatever their agenda is, they're reluctant to talk about the staying power of Bitcoin, but he has to admit it because he's in a hearing, you know what I'm saying, under oath, on record, you know what I'm saying? So that is what it is. So let's get into the news. We're going to go through it very quickly because we got some dope things to go over, some good points, and let's rock and roll. Valkyrie CIO anticipates spot Ethereum ETF approval will take between 1 and 2 years. A spot Ether ETF won't be coming anytime soon, but it could be in the next year or two. Valkyrie's chief investment officer, Stephen McClurg, said in an interview with The Block on Thursday. Now, we're not going to get into everything that he said because I think it's more about the principle and the idea of what's going on. Ethereum ETFs are on the way. And I say that because Bitcoin ETFs are here. If they are here and launched, then they already have to be working on the next thing behind the scenes. You have to think forward at this point. Like that's how you really, really get ahead. You have to have forward thinking. You have to be able to see into the future and make predictions based off of that. And we already have different types of financial products. So why wouldn't an ETF be on deck? You know what I'm saying? We have 21 shares who already have ETPs. ETPs are electronically traded products, and everything else, ETFs, ETNs, ETDs, they all fall under the category of ETPs. And they have different types of ETPs. 21 shares, Ethereum staking ETP. They have 21 shares Ethereum core ETP. And they have 21 shares short Ethereum ETP. So all these are just different financial products and derivatives created based off of the underlying asset. So if you're investing in the underlying asset and you feel like the more products, the merrier, that will boost the value of the underlying asset, why wouldn't you want to get into it now? None of this is financial advice, but this is how I believe we should be thinking, or that's how I'm thinking, and I'm just sharing my perspective. So let's get into another interesting article from Tech Bullion. I'll drop the link to all these articles below. Cryptocurrency versus Forex. Which one is right for you? So this article goes into the differences between cryptocurrency and Forex, crypto basics, Forex basics, key differences. Can they be inflation hedges? And they just go in on some information. But what I want to point out to you and what I want you guys to think about is locking in on an asset, because we're in the age of social media and everybody wants to invest. We'll talk about generational wealth and yada, 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 and we can get overwhelmed. So at this point, everybody wants to invest in real estate, start a business, build their brand, invest in cryptocurrency, invest in Forex, start trading. And if you just spread yourself too thin, I think that can be harmful to your future growth. So I encourage people to lock in. If you want to rock with real estate, lock in on real estate. Start doing all your research, start networking, getting yourself involved in the community, start buying and investing in real estate, most importantly, to get in the game, get some skin in the game, and then you make a big bag from your concentration. And then after that, you can start, you know what I'm saying, diversifying. or focus on your business for the next 5-10 years, and then you make a meal from your business, then you can buy a house and some crypto and some stocks, and you can do all that. But if you try to do everything at one time, I believe that could possibly be harmful to you. So that's something to think about. And let's get into this last article. Texas crypto firm Lejilex, or however you say it, sued the SEC following overstretching security classifications. So Texas-based cryptocurrency firm Lejilex has filed a lawsuit against the SEC over security labels on cryptocurrency assets. The lawsuit filed on February 21st in a federal court in Fort Worth, Texas, challenges the SEC's jurisdiction in several actions affecting its business last year. So what has the narrative that we've seen this entire time in the past couple years? The SEC laying down judgment and laying down laws and penalties against crypto companies. But with the Ripple case, Ripple going against the SEC and winning, it's like, there's a bully in the school and the bully's beating everybody up, and then it takes one person to whoop on the bully, and then they can't bully anybody anymore because everybody has seen them get whooped and everybody can step in and everybody starts to fight them now. That's what's happening with the cryptocurrency firms and the SEC. Cryptocurrency firms are saying, look, you can't just rule everything a security. You can't just do whatever you want to do because it affects our business at the end of the day. And now we're going to countersue because we have reason to believe that some of these aren't securities. Some of them may be, but all of them aren't. And this fight is going to continue to go. But now the change of the tone, the tone is changing. So these companies are starting to fight back. So if you're a fan of the cryptocurrency space, if you're in the community, you want to hear about these things because this is great news. You know what I'm saying? Shout out to them standing up to the bully. Now, I do believe in having regulations and procedures and safeguards around the space in order to protect the people, because there's a lot of fraudulent coins. There's a lot of pumping up coins. There's a lot of fraudulent NFTs, but there has to be a balance. I believe there can be a balance, and I don't know if we're going to get that, but I believe there is a balance between having safeguards to protect the people and protect their investments, but also allow the people to create wealth. Now, that's in a perfect world. We don't live in that, but those are some things I want you to think about. I'm going to drop the link to all this below so you can really, really try to get into and start doing your own research and start looking these things up yourself. But like always, I appreciate y'all for rocking with me, and I'm going to holler at y'all later.